Finally, some good news for buyers in 2023. The FHFA rescinds the loan level price adjustments, the extra fees for DTI. In this video, I'm going to go over some of the misconceptions about this. People confuse this with some other loan level price adjustments that still do exist. So follow me, I'll explain it all. All right, Matt, the mortgage guy, residential mortgage broker, licensed in 47 out of the 50 states. More soon to come. Go to greatmortgagebroker.com to connect me and my team. Today's video, I want to talk about the announcement last week from the FHFA that they are rescinding loan level price adjustments based on DTI. A lot of acronyms, right? So let's break it down. Federal Housing Finance Agency, FHFA, consider that conventional loans. Fannie and Freddie. They had announced in January initially that if your debt to income ratio was over 40%, you were going to pay an extra fee, which is, a higher rate or more cost for the same rate as before, just for having a higher debt to income ratio. Then in March, they said, hold on, we're going to delay that. We're not going to implement it May 1st, like we initially said. We're going to delay that one until August. The mortgage industry was up in arms saying this is the dumbest rule of all time. Not only is it penalizing people that can't afford to be penalized by charging them more when they're already at the top of their budget, right? If you're at over 40% debt to income, that means that your debts, your mortgage and your other revolving debt exceed 40% of your gross income. You don't have extra money to pay extra fees, to pay a higher interest rate and a higher mortgage payment to make that debt to income ratio even higher. So that was silly. But what a lot of us in the mortgage industry expressed, because it was widely opposed, was it was going to cause all kinds of confusion for the consumer, which we knew FHFA didn't want. If you pre-approve somebody and you've got a debt to income ratio of 37.7 and you're showing them a 6.25% interest rate, let them know what the payment's going to be, what their total cash to close is going to be. And then they go and get into contract and an underwriter from a lender says, you know what? Well, based on how much overtime they've worked over the last year, we've got to average this. We've got to do that because they've got variable hours. Reduces their income by $272 a month. And now you've got a debt to income ratio of 41.2. Go back to that borrower and say, just kidding about the 6.25. It's actually 6.5% interest rate. So your payment's going to be another $55 a month. You got penalized for having a higher debt to income ratio. It's just going to be a mess, right? It was going to cause problems and it just wasn't well thought out initially. So here we are in May of 2023. Rather than just postponing it until August, they said, we're going to rescind it. No longer going to be this adjustment, this extra fee for higher debt to income. Mortgage industry cheers the FHA decision to rescind DTI-based loan level price adjustments because it was silly, right? So announced in March, it would delay it till August. And now in May, they're saying, we're just not going to implement it. So Director Sandra Thompson not only said that she appreciated the feedback, but to continue this valuable dialogue, FHFA will provide additional transparency on the process for setting the enterprise's single-family guarantee fees and request public input on the issue. Requesting public input means they put out an RFI, is what they call it. It's a request for input. You're able to, as a mortgage originator, as a real estate agent, as a concerned citizen, basically provide your input on different things they're thinking about doing. And so they really are trying to do right. They haven't released this yet. I actually looked this morning to see if that RFI has been released, but when it is released, rest assured, different mortgage organizations, and I'm sure National Association of Realtors are going to provide input on the good, the bad, the ugly, things that we agree with and don't agree with. Everybody gave their input. FHFA rescinded it. It's a win, right? Here's what I need everybody to understand. This is not the same thing as this. Remember, this chart was all the rage. I can't believe that people with better credit, with bigger down payments, are going to be paying more for their mortgages than they were before, and that people with lower down payments and lower credit scores are going to be paying less. These were also loan level price adjustments. These were loan level price adjustments not based on debt to income ratio, but based on credit and down payment. I'm going to be crystal clear here because there's some confusion. I've seen it out there. This one already went into effect. It went into effect May 1st for delivery to Fannie and Freddie, but was already on rate sheets in February and March. Higher credit scores, 740 to 760 is an example here, right in the middle. 15 to 20% down, 75 basis points worse than it was before. Lower credit scores. And then come over here. 5% down, 660 to 679, 100 basis points better than it was before. Not better in that worse credit score gets a better term, but better than it was before. The spread was bigger. And for example purposes, let's just call great credit 20% down a 6%. Let's call 640 credit score with 3% down a 7%. And it's a full 1% difference. If that was the old way, the changes made it to where now maybe the great credit and 20% down is 6.125, and the 640 credit with 3% down is 6.875. So it lowered that gap. It made it on the low down payments and lower credit scores a little bit better. Higher credit scores, higher down payments, worse, right? So that one still in effect. The ship already sailed. The other one with debt to income ratio, loan level price adjustments, that is the one that was rescinded. Any questions, comments, concerns, feel free to reach out. Wanted to clear that up. I know some people were confused. I had some people reach out to me and we chatted about it. But there it is. They rescinded the loan level price adjustment for debt to income ratio. It was going to be a disaster, so I'm glad they did. Check out other videos on the channel. If you want to connect me on my team, again, that's greatmortgagebroker.com. If you want to connect with a real estate agent, no matter where you're at in the country, go to homeandmoney.com/Matt. Thanks for watching.